Welcome back to PyUncut. Today's session kicked off the week with a broad rebound on Wall Street, led by big tech tailwinds and an Apple-fueled sentiment pop. By the closing bell, stocks were green across the board, rates eased a touch, oil slid to 5-month lows on supply worries, and crypto cooled after a weekend pop. Let's break it down. 1. The big picture. U.S. equities rallied as investors leaned into mega caps and looked ahead to a busy earnings stretch. The S&P 500 climbed roughly 1.1%, pushing to within a whisker, about 0.3%, of its all-time closing high. The Dow added about 515 points, around 1.1%, and the Nasdaq outperformed at around plus 1.4%. The tone was set by Apple's surge and a modest pullback in Treasury yields, which eased some valuation pressure on growth stocks. 2. Index moves in leadership. S&P 500, plus 1.1%, closing just shy of a record. Breadth improved versus last week's choppiness. Dow Jones, plus 515 points, around 1.1%. Industrials and staples held their own, a cyclical stabilized. Nasdaq Composite plus 1.4%, paced by Apple and a handful of AI-adjacent names that re-engaged after recent volatility. Under the hood, tech leadership was clear, but financials also clawed back ground as last week's worries around credit and fraud at some regionals faded a bit. 3. The drivers. Apple at all-time highs. Apple rallied about 3.9% with enthusiasm around its latest iPhone design and ecosystem upgrades. That single stock strength added meaningful market cap to the indices and buoyed peers in semis and platforms. Earnings week setup. The market is looking ahead to reports from Coca-Cola, Tesla, Procter & Gamble, among others. Expectations are that megacaps will reinforce AI and device cycle narratives, while consumer bellwethers color the demand picture. Macro data vacuum in the Fed. With some government economic reports delayed by the shutdown backdrop, traders are leaning on corporate guidance and Fed speak to triangulate the path of inflation and growth. For now, rates drifted slightly lower, and that was enough to reignite the growth trade. 4. Rates, yields, and the dollar. The 10-year Treasury yield hovered around the 0.4% mark intraday, briefly dipping below that psychological level before settling near 0.98 to 0.401%, depending on the print you caught. Lower yields supported duration-sensitive tech and high multiple stories. 5. Sector snapshot. Technology, clear leader, juiced by Apple and AI infrastructure sympathy moves. Financials, stabilized as investors reassessed last week's regional bank jitters. Selective rebounds in regionals like Zion's helped sentiment. Consumer staples and discretionary, mixed to positive with eyes on this week's staples earnings for pricing power read-throughs. Energy, lagged as crude slid to 5-month lows on oversupply fears and a contangling curve, a headwind for near-term cash flows. 6. Notable stock stories. Apple, plus 3.9%, setting a personal record high and providing index-level ballast. Cleveland Cliffs popped 21.5% after the CEO flagged a potential deal with a global steel producer and rare earths discovery headlines. The latter resonated as China's export curbs keep critical material supply in focus. Volatile, but emblematic of a market chasing catalysts. Amazon, up about 1.6%, despite reports of a cloud service outage. Investors appear to be looking through one-offs into secular growth. Regional banks, a modest bounce. Zions Bancorp reclaimed some ground after last week's hit, helped by calmer rate action and hope that issues flagged last week aren't systemic. 7. Commodities check, oil slumps. Crude remained under pressure. Brent settled near around $61 and WTI near around $57.5, both at 5-month lows. The narrative, OPEC plus output resilience, non-OPEC supply staying firm, and shoulder season demand softness pushing the market deeper into contangoing where near-dated contracts trade below longer-dated ones. That incentivizes storage and signals oversupply fears. For equities, that's a drag on energy, but a modest input cost relief for transports and parts of consumer discretionary. 8. Crypto corner. After a weekend bounce, Bitcoin hovered around $111,000 during US hours, with enthusiasm tempered as majors chopped sideways. Some alt strength cropped up in XRP, Link, and privacy names like Zcash. Strategists framed the rebound as a structural reset rather than a dead cat bounce, but momentum cooled as equities took center stage. 9. Global markets. Asia kicked off the risk-on tone. Japan's Nikkei's led with a sharp rally aided by local political developments, while China printed about a 4.8% annual growth pace that was good enough for a market eager for stabilization signs. Risk appetite spilled into the US Open and never really faded. 10. What's next? The week ahead. Earnings. Eyes on Coca-Cola, Tesla, Procter & Gamble, Intel, and Netflix for reads on consumer health, AI capex, device cycles, and streaming profitability. The key is whether guidance can shoulder a market priced near records. Rates and Fed. Sub 4% on the 10-year has been a green light for high multiple tech. Any hawkish surprise, tariff chatter, or curve repricing could quickly challenge that. Commodities. Watch oil's curve. Persistent contango plus rising inventories can keep energy equities on the back foot even as broader markets cheer lower input costs. Crypto. If Bitcoin can hold the six-figure handle with calmer macro, risk proxies may keep acting as a barometer for liquidity appetite. Breadth versus big tech. Today's rally leaned heavily on Apple and the mega caps. That's fine for index levels, but for a durable upleg, you want to see small and mid caps participate more meaningfully, particularly financials and industrials, so keep an eye on equal weight indices this week. Rates are still the fulcrum. The line between 3.9 and 4.2% on the 10-year remains the equity market's mood ring. Sub 4% has historically been rocket fuel for duration trades. A quick backup of yields could flip the script fast. Oil's message. A contangoing curve and 5-month price lows hint at softer near-term demand or too much supply, or both. That helps margins for shippers and select consumer names, but is a warning for energy earnings revisions if it persists. Earnings is data substitute. With some official releases delayed, guidance and margins from staples, autos, EV, and AI infrastructure will carry extra weight in shaping the macro narrative. The bar is higher with the S&P within a rounding error of record territory. Markets kicked off the week on a high note. S&P 500 up just over 1% and within 0.3% of record highs. The Dow plus 515, Nasdaq plus 1.4%, all powered by Apple at fresh records and a friendly drift lower in Treasury yields. Oil slipped to 5-month lows as contango deepened, taking a bite out of energy, but easing input costs elsewhere. Bitcoin held near 111K as weekend momentum cooled. The focus now turns to earnings, Coca-Cola, Tesla, P&G, and more, where guidance could make or break this late-year rally. That's it for today's PyUncut. See you tomorrow.